Una po sa lahat, ay gusto ko pong magpasalamat sa lahat ng mga nag-subscribe, nanood at tumangkilik ng aking naunang dalawang video. Ngayon naman po ay aking tatalakayin sa inyo ang analysis and interpretation of financial statement. Okay, our learning objectives are define the measurement levels, namely liquidity, solvency, stability, and profitability. Number 2 is perform vertical and horizontal analysis of financial statements of a single proprietorship. Number 3, we're going to compute and interpret financial ratios such as current ratio, working capital, gross profit ratio, net profit ratio, receivable turnover, inventory turnover, debt to equity ratio, and the like. Now, what is financial statement analysis? Financial statement analysis is a process of evaluating and interpreting an entity's financial statements to assess its financial health for the purpose of making better economic decisions. We have two methods in analyzing financial statements. They are, number one, horizontal and vertical analysis. And number two is financial ratio analysis. Now, what is horizontal analysis? Yes, horizontal analysis is the comparison of financial information over two or more reporting periods. The purpose is to analyze if changes in amounts are unusually high or low, which may entail investigation of the reason for the unusual change. What are the two steps in horizontal analysis? Number one, compute for the change in the amounts in a baseline year, which is the earlier period and a later period. Number two is divide the change by the amount in the baseline period. Okay, let us now compute the horizontal analysis in a comparative statement of financial position of ABM Company as of December 31, 20x1 and 20x0. So, our heading will be assets 2000x1, 2000x0, then increase or decrease, and then percent. Okay, let's start with cash and cash equivalents. In 2000x1, it has a balance of 50,000. And in 20x0, its balance is 80,000 pesos. So, this means that there is a decrease of 30,000 pesos. Why? And how did you get it? 50,000 less 80,000 will give you the amount of 30,000. And that is negative because 50,000 in 2000x1 is lesser than 2000x1. Okay? Then, in order to get the percent, you're going to divide it, nag-arrive sa 30. 0.38, negative 0.38. Paano siya naging decimal? Paano siya naging percentage? You're going to multiply it by 100. And then, another procedure is, you're going to move two decimal places from the point, ay i-move mo siya ng dalawang decimal places. So, 0.38 will now become 38%. But don't forget to write the parenthesis because it is negative in that case. Now, how about accounts receivable? Okay, let me review. Why accounts receivable should be netted? Okay, because there is a contra asset account of allowance for doubtful accounts. So, there is a provision for doubtful accounts. It should be netted. Okay, in 2000 X1, it is 1,270,000. And then, in 20X0, it is only 305,000. So, there is an increase of 965,000. Where did you get it? 1,270,000 minus 305,000. Okay? And then, the percent is 316%. Okay. Now, how about merchandise inventory? In 2000 X1, it is 100,000. In 20X0, it is 80,000. So there is a difference of 20,000 or an increase of 20,000. Now, what is the percent? Yes, 25%. Nanggaling siya sa 0.25 na naging 25% kasi inilipat ng dalawang places from the point hanggang sa right. Dalawang beses. Or another way is to multiply the decimal amount into 100. Okay? So, what is our takeaway in this computation of horizontal analysis? So, the base year or the earlier year is to be deducted from the current or later year. So, for example, we have 50,000 and then you're going to deduct to 80,000 will give you a negative 30,000. Then you're going to divide by the amount in the later year, in the base year of 2000 X0. And then, will give you a negative 0.38 or negative 38%. What are the two methods in converting the decimal point to percent? It's either you're going to multiply by 100 or just move 2 times from the point to the right. 2 places from left to right start with a point. Okay? Okay. So, the example of vertical. Vertical is pababa. Yung horizontal, pahalang. From left to right. Whereas in vertical analysis, from top to bottom. Okay. So remember that in vertical analysis, the denominator is the total assets as far as statement of financial position is concerned. So therefore, the cash and cash equivalents is 50,000 over 1,790,000 is equal to 3%. Okay? Did you get it? How about accounts receivable net? 1,270,000 over 1,790,000 is 71%. How about 100,000 over 1,790,000? So the resulting percent is 6%. Okay? In prepaid assets of 34,000, you're going to divide it by the total assets of 1,790,000 will give you 2%. And then the total current assets, if we are going to add, we have 3 plus 71, 74 plus 6 is 80, and then plus 2, 81. But um, there is a difference because of decimal points. Okay? So, but if you are going to divide 1,454,000 by 1,790,000, it is 81 something. 81 something. So, uh, it was round up to 81. And then how about property, plant, and equipment? Remember that it is a net. Huh? So 336,000 over 1,790,000, it is what? 19%. Then the same because there is no other item for the property, plant, and equipment, therefore the same percentage of 19%. Okay? So definitely 81 plus 19, how much is that? It is 100. Meaning that our total assets is at 100%. And it is the denominator. Okay? Now, let's go to statement of comprehensive income. Now, if in the balance sheet, the denominator is the total assets. In our statement of comprehensive income, the denominator is the sales or gross sales. Okay? So, 4 million over 4,500,000 over 4,500,000 is equal to 1 or 100%. And then the cost of goods sold, 1,720,000 divided by 4,500,000 is 38%. Then the gross profit is, if you're going to deduct the percentage, 100% less 38% is 62. And you can prove it if it is correct. If you're going to divide 2,780,000 divided by 4,500,000. Okay. When it comes to salaries expense, it is 560,000 over 4,500,000. The percent is 12%. When it comes to utilities expenses, it is 100 over 4,500,000, it is 2%. Then 240,000 divided by 4,500,000 is 5%. And then so forth and so on. So alam natin na i-divide lang natin siya sa sales. At laging ang sales ay 100%. And this is the denominator. Okay? So, kayo na ang bahala kung paano siya makukuha kasi yan naman ay um, fundamental operation, and that is division. Okay? Next is, what are the financial ratio analysis? Okay? Financial ratio analysis involves the computation of percentages, fractions, and proportions using certain formula. So, kanina natalakay natin vertical and horizontal. Ngayon naman tayo ay gagamit ng mga formula para makuha ang percentage, para makuha ang fraction, at para ma-determine ang proportion. So, may mga kanya-kanyang formula. Okay, we have four classifications of financial ratios. Number one is liquidity ratio. Activity ratio ang number 2 when it comes to asset management ratio. And then debt management ratio for leverage ratio. And then profitability. So isa-isahin natin. Kapag liquidity, meaning kayang magbayad ni company ng kanyang short-term obligation. Kapag ka naman activity ratio, ano ba ang naging contribution ni asset para ma-attain yung income or profit. Okay? Sa leverage ratio naman, ano rin naman ang naging katulungan ng debt o pagkakautang para maka-generate ng income. Okay? Ano ba ang naging performance? Okay? So, when it comes to profitability ratio naman, in general, magkano ba ang percentage na kanilang kayang makita or nakita ng nakaraang panahon at ano ang possible na maging increase in profitability ratio. Okay? Let us discuss now the liquidity ratios. So, liquidity ratios provide a measure of the ability of a business to pay its liabilities. Number one example is current ratio. This is the most commonly used ratio in measuring the ability of a business to pay its short-term debts. So the formula is current ratio is equal to current assets all over current liabilities. So what are the components of the current assets? We have cash on hand, cash in bank, petty cash fund, working change fund, yun. Then, accounts receivable, marketable securities, and inventories. Okay, so yun ang mga current assets. How about the current liabilities? Ito yung mga accounts payable, short-term loan, no? Yung current na um, kayang bayaran hanggang 12 months or operating cycle. Ano? So, remember the formula for the liquidity ratio? Current assets equals current assets all over current liabilities. Okay? Let's move to liquidity ratio. This is number 2 example in the liquidity ratio. So, quick ratio is termed as acid test ratio or quick acid test ratio. A much stricter ratio used to measure the ability of a business to pay its short-term debts. What is the formula? Quick ratio is equal to cash plus marketable securities plus accounts receivable net. So, yung tinatawag nating quick assets. Quick assets in the sense that it can be readily convertible into cash. So, remember that marketable securities is next to cash. Okay, hindi kasama dito ang inventory kasi mas madaling ma-convert ang tatlong items na ito. Cash, marketable securities, and accounts receivable. Samantalang yung merchandise inventory, ibebenta mo muna. Then bago siya maging accounts receivable kung ikaw ay nag-grant ng credit. So, medyo matagal-tagal ma-convert si merchandise inventory. So, kaya, pag sinabing quick assets, madaling ma-convert into cash. How about current liabilities? Kapareho lamang ito ng denominator doon sa ating ginamit na current ratio. Okay? So, yung mga bayarin sa loob ng 12 months. Okay? The number 3 example of liquidity ratios is the working capital. This is actually similar to current ratio, but measures the ability of the business to pay its short-term debts by the excess or deficiency of current assets over current liabilities. Ang formula naman dito is just deduct the current liabilities from current assets. So, parehong amount na gagamitin, kaya lamang ang formula ay iba. Pero, ang magiging resulting figure nito ay peso amount pa rin. Working capital is equal to current assets minus current liabilities. Okay, next is activity ratio, asset management ratios. These activity ratios provide a measure of how efficient a business is utilizing its resources. Okay? Inventory turnover is a measure of the number of times inventory is sold and replenished during the period. So, what is the formula? Inventory turnover is equal to cost of goods sold over the average inventory. And then your average inventory is determined by adding the beginning inventory and ending inventory and then divided it by 2. Okay? Next, activity ratio is the another example is days of inventory or average sale period. This is the measure of the number of days inventory is held before it is sold. Gaano katagal itong nananatili sa estante o shelf ng isang merchandiser? So, the formula is days of inventory is equal to 365 days in a year over the inventory turnover. So, determine first the inventory turnover before you get the days of inventory. Okay? Next is the accounts receivable turnover. This is a measure of the number of times accounts receivable have been collected during a period. It is an indication of the efficiency of collection. So, accounts receivable turnover is equal to credit sales over average accounts receivable. So, you're going to get the average accounts receivable by adding the accounts receivable beginning and accounts receivable ending, and then you're going to divide it into 2. So, the days of receivable or average collection period is a measure of the average time to collect a receivable. Days of receivable is equal to 365 days in a year over receivable turnover. Okay? Then, let's go to the leverage ratio or debt management ratios. And this is the formula that will provide a measure of the extent a business uses debt financing or leverage. Letter A, debt ratio or debt to asset ratio. This measures the proportion of assets financed through debts. And the formula is debt ratio is equal to total liabilities over total assets. So, magkano ba ang nirepresent na ratio ng total liabilities over the total assets? So, mas malaki ba ang liabilities kaysa equity? So, dito natin makikita kung ang atin bang utang ay mas malaki kaysa equity. Okay? Kasi ang ating divisor is total assets. So, kung ano man ang maging makuha natin sa debt ratio, ito ay ima-minus lang natin o idadagdag lang natin sa equity para ma-represent ang total assets, no? So, 'di ba, ang formula natin sa ating accounting equation, total liabilities plus total equity is equal to total assets. So, kung anong ma-arrive natin dito, ay isama lang natin sa equity para makabuo tayo ng total assets. Okay? Now, another example in leverage ratio is equity ratio. So, ito, total equity over total assets. So, ito yung sinasabi ko. Kung nakuha mo yung debt ratio, makukuha mo rin si equity ratio, pagsamahin mo, ano ang total. Okay? Magiging 100 siya or 1. Okay? Then, debt to equity, ito naman, this indicates how much debt is used to finance the assets relative to the amount pertaining to the owners. So, the formula is total liabilities over total equity. And that is debt to equity ratio. Ano ba ang relasyon ng dalawang ito sa kabuuang asset? Okay? Next is, the last one is the profitability ratio. Okay, profitability ratios provide a measure of the performance of a business in terms of its ability to generate profit from its resources. Okay, gross profit ratio shows the relationship between sales and cost of goods sold. So the formula is gross profit ratio is equal to gross profit over net sales. So ano ang relasyon ng sales sa cost of goods sold? Then number 2, under the profitability ratio is net profit ratio. This measures profitability after considering all income and expenses. Ito na yung pinaka-bottom line. Magkano ba ang net profit? Then, ano ang relasyon niya kay net sales? Gaano ang percentage? Ano ang percentage na makukuha natin? Net profit for the year over net sales. Okay? Then we have letter C, return on assets. This measures the profit generated in relation to the total resources available to the business. So, profit for the year over total assets. Okay? That is return on assets. Sa generated income or generated profit, ano ang relasyon niya sa kabuuang total assets? What percentage represents the net profit or profit for the year over the total assets? Next, letter D, return on equity, return on net assets. Okay, this means the profit generated in relation to the resources invested by the owners of the business. The formula is return on equity is equal to profit for the year over total equity. Okay, what percentage represents the net profit to the total equity of the investor or the businessman? Okay, then to summarize, liquidity ratio, current ratio is equal to current assets over current liabilities. Then quick ratio, cash plus marketable securities plus accounts receivable net over current liabilities, and then working capital is equal to current assets minus current liabilities. In the activity ratio, inventory turnover is equal to cost of goods sold over average inventory, and then days of inventory is equal to 365 days in a year over inventory turnover. And then accounts receivable turnover is equal to credit sales over average accounts receivable. And then days of receivable is equal to 365 days in a year over receivable turnover. And the last one is the leverage ratio or debt management ratios. Debt ratio is equal to total liabilities over total assets. And then the other one is equity ratio is equal to total equity over total assets. And the last one is debt to equity ratio is equal to total liabilities over total equities. Okay? I hope that you learn um, so much in this presentation, and please subscribe so that mapapanood pa rin ninyo ang mga susunod kong gagawin na video. Okay? Thank you very much and happy learning!